Hello everyone, this is Cabo Bravo speaking, and this is a quick analysis on gold spot against US dollar. As you can see, since 2016, price has been moving in the uptrend. So gold has been in the uptrend 2016, and right now price uh is moving in the corrective phase. It's now in the corrective phase because price is always with two phases, either the impulsive phase or the corrective phase. Right now price is in the corrective phase, so because this is the weekly time frame, so we cannot deal with all these trend because we are not positional traders. Most of us, we are swing traders and intraday traders, and some of us are scalp traders. So because we are not positional traders, what we can do is we are only dealing with this part here. This is a part of our interest. We only deal with this part. So let's focus on the current market price. Let's focus on the current market price. I mean, um, this zone here. This is the weekly time frame. This is current market price in the weekly time frame. So let me remove this rectangle. So here we have this potential level here, the demand level. We also have this potential level here, which is the supply level. We can also mark this minor supply level over here. So our price just touched, it has just touched the demand level. Probably it's going upward to touch this level or this level here. In the weekly time frame, we know price is still bullish, so our first bias is supposed to be bullish bias. So we suppose that price is going to move upward to touch this level, but we know this movement is not going to be straight. There might be impulsive and corrective movements too. There might be highs and low too. So we know the bigger picture, we know the bigger direction the market is going upward, but how is it going, we don't know. When it is going upward, we don't know, but we know that price is going to be upward in a higher time frame. But anything can happen. We can have straight move upward, but market can also break below this level and it drop. So it's a 50-50. We're not 100% sure of what's going to happen in the market. So our task as a traders, our responsibility as traders, is to react. We have to be the reactors. We should only react on the market. If we try to predict the market, we should not stick to our prediction. We should always be glued um, with focusing on the market rather than predicting our focusing on a prediction. We should always focus on the market movements, the market structure, how market moves, and how we react to those movements. We should not stick to predict our predictions. Will be lost because this is market. We cannot predict the market. Nobody knows when market will go next. So we know that market is still bullish in a higher time frame, but we should always switch to low time frame to see the market structures in low time frame, which will allow us to take short-term trades. So will help us to grow our accounts because most of us, as I said before, we are swing intraday traders and scalper traders, so we cannot focus much in weekly time frame. We can switch to low time frame to get other entries and opportunities. So we know this our levels. We already know this is our levels in weekly time frame. So we can switch to low time frame to see market structure low time frame if they align with the higher time frame, or if we can get opposite market structure is not bad, we will take trade according to what we see in low time frame. So let me remove the drawings. I'll only leave these key levels. I have this one here and I have this key level here. What can I say? This is my supply. I have this supply here and I have this minor supply. This is minor because it's been touched multiple times, so it's not too strong for me. So if we go into daily time frame, this is what we get in daily time frame. This is what we get. So we see this is the levels we want to price to advance to. We have this level and this level too, but price has been moving down, and from this point, from our demand area, from the weekly demand area, price formed a multiple touches, double touches, or for other people trading patterns, they call it what do they call it, double bottoms. Yeah, double bottoms. And from the simple concept, which most of us we know about, because I believe most of us we know these patterns. I myself was studying the patterns before I shift to market structure, supply and demand. So we expect, for normal concept, we expect uh, a retracement of the neckline from the normal simple concept before push up. So which means we can have a possible draw from here to this point. And if we will try to measure this distance in terms of pips, this is almost 400 pips. 400 pips for intraday, for swing, that's enough pips. That's enough pips. So we can look for possible reaction in the market at the current area. Let me remove these drawings and put my chart cleaner. This way. So I mean, right now price is moving here in this box. It is like a form of consolidation, as you can see, because if we start this, we see we have impasse, corrective, impasse is corrective, but we cannot term this is the end of this corrective wave, because we do not sure, or we're not sure if price will continue to rise from here or will it drop below this point. So we're not sure what will happen. So for us, what we're gonna do is we're going to observe what will happen at this box, because right now for me I don't see any possible or any good opportunity to take any trade, either to buy or to sell, because it's not clear. If we price will drop below this rectangle, then we can expect the price to retrace, then we can sell on retracement, because we want to take a minimum of this trade here, because I believe if we price it drop this break below this rectangle, we can expect a drop to minimum of this level, this level here, even though it can even break below here and it drop down to this one here, but our minimum target is going to be here. So we can wait for the price to drop below, then retrace, then we can take our sell position here, hunting around this 400 pips. Alternatively, we can wait for the price to push, drop, to break above this rectangle, then we can also consider taking a buy around this area of this retracement. So anything is possible. This is market, anything can happen. You cannot predict the next move of the market 100%. That's why we always insist in risk management, because no one is sure about the next move of the market. So we can even switch to lower time frame to see the other concept or other market structure, because we know the fractal nature of the market is always a fractal in nature, which means the impulsive, the corrective in lower time frame, I mean in higher time frame, the same thing happens in lower time frame too. What's happening in higher time frame can happen in lower time frame. Which I mean by the fractal nature of the market is a fractal, which means if this is higher time frame, this is weekly time frame, we have impasse, correction, impasse. This correction of the weekly time frame, if you switch down to maybe to 4-hour time frame, you can see the same thing: impasse, correction, impasse, correction, impasse, correction, impasse, correction. And the same correction, the single move here in a 4-hour time frame. If you switch to maybe to 5 minutes time frame, you can see the same thing. You can see impasse, correction, impasse, correction, impasse, correction. So market is fractal in nature. Anything you see happening in a certain time frame happen the same way in other time frame, but it's just a different degree. So we can switch to lower time frame to look for entries, because when higher time frame low does not give clear market structure, we can switch to lower time frame to see the market structure, and vice versa. Which I mean, if lower time frame does not show good structure, we can switch to higher time frame to see good structure. So let's switch to 4-hour time frame to see what's happening here. Sorry. So let me move this area. So in a 4-hour time frame, I have this point here, which is the potential level. Why potential level is because it is the place where this trend initiated. This trend was started here, this 4-hour trend. As I said, market is fractal in nature, which means we have 4-hour trend within 1-hour trend, etc. So this entire trend here starts over here, so it's the potential level. And the same way, I have this level here, which I can also say is another potential level here, as it marks the invalidation. The potential level is simply the level which validates or invalidates any trend. That's a potential level. The level is a level which validates or invalidates a trend. Validates, I mean, if this is a potential level, so which means if price will drop below this, will break this level, which means this trend from here is no longer valid. If a price will break below here, which means this trend is no longer valid. But if a price will come to respect this level and go up, which means this uptrend will continue going up. So right now, what I'm observing to see, I want to see the reaction of the price at this potential level here. Will it respect and go up, or will it break and it drop? So if it will break, I'll possibly look for retracement of the potential level. Then I'll take a sell upon retracement of this one, and my target is going to be here at the start of this trend. Or if I'll get a potential continuation of the trend, confirmation over here, I will buy, and my target is going to be just above in the weekly time frame. So anything can happen. As I say, this is market, we don't know what's going to happen next. So this is my analysis on gold. I love to end in the 4-hour time frame, because I don't like to analyze in lower time frame. Anything below 4-hour time frame for me is noises. So I want to see clear market structure. I only analyze in lower time frame if I want to take scalping trade, but if I want to take intraday or swing trade, I always end in 4-hour time frame. So just to summarize my analysis for now, what I'm waiting to see is either if I get a reaction to this level, then the price pushes up, because this one here is my level of invalidation. It's my potential level. So sorry, like this one, put it here. So that means I'll be looking to see what's happening here. So my first bias is the price to come to this level, touch, respect, and go up. Then I will be looking for buy. But if a price when it's successful break below this level, then I will wait for the possible retracement. And I'll be looking to short this pair to this level here. So that's my bias on 4-hour time frame. Remember where we started. We started in a weekly time frame just to see overall market direction, because we are not positional trader, so we cannot focus, or we cannot focus only on a weekly time frame. We cannot stay there. We have to switch down to lower time frame to see what's happening in lower time frame too, because most of us, we scalping, we intraday traders, and we are swing, so we cannot focus only in the weekly time frame. So we have to switch to lower time frame to entries. So for me, this is my bias on gold, as I'm waiting to see what's happening at this area, because this is the level of invalidation here. So I'm waiting to see what will happen here, the reaction at this current level. Will the price break this level and give us a possible sell, or will the price respect and give us a possible buy? So that's what I'm waiting to on gold. And this is my bias analysis on gold. Once again, it's Cavo Bravo speaking. Welcome to my Market Wolf Analysis Club. Thank you.